Hello and welcome to this brief educational investment video. Now today I want to talk to you about how to identify quarterly growth. Now identifying quarterly growth refers to a company's increase in revenue, profit, or basically an increase in the production of whatever product or service they're providing. Another way to describe it is to simply say financial expansion, or how much did the company grow. That's really about it. Now the standard or traditional way to determine this is to simply measure the second quarter results against the previous first quarter. This conventional wisdom is supposed to identify whether the company is basically going forward or not, but the only trouble is that this method is not reliable. It's not really consistent. What if I told you there was an easier and more consistent way to tell if a company is growing or not? Well, that's what we're going to be doing in today's educational presentation. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. I've been trading now for roughly 50 years, 5 decades. I started my career on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years, and 9 of those years was a specialist. A specialist is someone who made markets in roughly about 50 or 60 stocks. So I made markets during the crash of '87 and the bull market that followed. So in my nearly 5 decades of trading, I've accumulated tips, techniques, and methods that have really lasted throughout time, that really have high levels of consistency. And I formed Specialist Trading about 15 years ago with one goal in mind, and that was simply to educate traders all the things that I've accumulated in my nearly 5 decades of trading. And you'll see that education in today's brief webinar. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results by using this technique for identifying quarterly growth, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get more education from us on a daily basis, please feel free to follow us on X, formerly known as Twitter. There's our handle right there at SPCLST. TRADG. Every day I post between 5 and 7 different snapshots of signals that our methods and strategies have generated. I also post little bits of financial wisdom, so there's lots of ways to get free education on a daily basis. Please feel free to follow us on X. Okay, so let's start out with some facts before we go into the gist of today's educational presentation. Now, I'm not saying these to scare you, but they are actually the truth, because the first fact is that 80% of all traders and investors lose money. And when I say lose money, we're not really just talking about having a bad couple of months or maybe a bad year, but most of these traders will give away everything that they've set aside for trading or investing. This also means that 15% of all traders will just break even. And then ultimately, only 5% of all traders will be consistently profitable. Just that small little amount. Now, if you want to see what that looks like on a pie chart, well, this large portion in red represents the amount of traders that will ultimately fail. That blue slice in the middle represents the amount of traders that will actually just break even. And that green little sliver represents the percentage of traders that will ultimately be consistently profitable. So you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? And it's really actually quite simple, because the answer is these traders, whether they know it or not, have all learned how to be in sync with the trend. I mean, think of it. You only lose money when you're out of sync with the trend. If you're buying and the market is going down, you're out of sync. So this brings us to what we're going to be talking about and how to identify quarterly growth. So let's begin. What if there was a tool designed to have you in sync with the overall trend of whatever market, whatever stock, future, currency pair, makes no difference, whatever you were looking at investing or trading? Well, there actually is. We call it the buy-sell line. Now, before you think it's going to be some $10,000 tool you have to purchase, no. In fact, you actually have access to it right now, because the buy-sell line is just the 50-period simple moving average. That's all it is. But you have to know how to apply it correctly. So, in order to use the buy-sell line properly, you must ask yourself this question before you invest, and that's this: where is price in relation to the buy-sell line? Because you'll only come up with 2 possible scenarios. If price is above, well, then you will only have a buyer's bias. And conversely, if price is below the 50, then you will only have a seller's bias. It's that simple. But let me show you how powerful it is, because we're going to share with you this technique on how to identify quarterly growth by applying this buy-sell line. Now, we made it simple for our students around the world. We have students in over 115 countries and in every state in the United States, because we developed and designed the PTS Primo charting platform. I developed this with Pro Trader Strategies, my sister site, where we actually get you in sync with the trend automatically. So we make it that simple. So here's what we're going to do. We're going to toggle over onto our charts right now. As you take one last look at our disclaimer, let me share with you what you can use on our charts to get you in sync with quarterly growth and to know whether a company is expanding or not. And we're not going to use conventional wisdom. We're not going to use what you've been taught before. We're going to use a simple but powerful way in which to determine that. So as I look over at our charts right here, excuse me, I think that okay, there it is. We missed it originally, but here we are. We're looking at a weekly chart of IBM. Now, looking back, roughly going back a couple of years, it's safe to say that IBM has been going steadily higher. But here's how you tell whether the growth is increasing before the fact, because this is just after the fact. In our platform right here, click on the buy-sell line, and then click on Fluid. Okay? Now, this is the 50-period moving average right here. Anything above the 50-period moving average, the back of the screen is colored blue. This is what we call the blue buy zone. Anything below it is red, or the red sell zone. Now this automatic tells you if a company is expanding or not, or growing. Because if price is above, it can't help but be growing. It's above its average. So there's no need to find out what was going on with the previous quarter, to go through all these mental gymnastics and figure out the earnings and what the company's doing. It's all right here for you in a visual display. With one click, you'll know if the company is growing or not. So this is a weekly chart of IBM, and obviously the stock has been growing because the whole time it's been in the blue buy zone. Let's look at another chart here. This is Caterpillar Tractor, a weekly chart. Once again, was kind of going lower to sideways, and then all of a sudden took off, and this was roughly about a year ago. All right, how could we have known that in advance that the company wanted to expand? Well, we don't have to wait for quarterly results or earnings. All we have to do is click on the Fluid, and we knew right here that we were in the red sell zone, so company wasn't really expanding until right here. We had consecutive closes above, and this was in June or July of 2025. This was telling us that there is growth in the company because it's trading above its average. This is when the company was trading roughly about $350, and as of right now, it's roughly about over twice that amount. It's doubled in price in 1 year, simply because price was above the 50-period moving average. We can look at another chart. Here's Apple, a weekly chart of Apple. Same kind of chart here, kind of going sideways, and then started to go up roughly last year. If we applied the buy-sell line, click on Fluid, we noticed that the company wasn't growing. It was just kind of going sideways until right here. This was in August or September. We had consecutive closes with the blue background. And even though the company hasn't taken off, you can see how price is growing, and therefore the company is substantial. Now we can go out into a higher time frame. Here's a monthly chart of Google. Now Google obviously has been heading up. It's safe to say that in hindsight, but how could we have known that the company was growing looking back roughly about 3 to 4 years? It's as simple as adding the Fluid buy-sell line. And we knew as far back as 2019, this was a good 7 years ago, that the company was growing. It was roughly a $60 stock, looking at this monthly chart. But you notice that price comes down, it touches the 50, but we never have consecutive closes in the red sell zone. So as long as we're in the blue buy zone, it's telling you that the company is growing and there is growth. And the company was originally selling at around $60 about 6 years ago. It's now roughly at $300. So do you think this tool could have helped you with your investing? We can look at an entirely different market. Let's look at an ETF for gold. This is GLD. We all know that gold has been taken off tremendously. How could the buy-sell line have helped us? Well, gold has been above going back 2 to 3 years. So there was no reason to think that gold was going to head lower on a monthly, or I should say weekly time frame. And it remains in the blue buy zone. Now this can also work and have the opposite effect. As we see here, looking at TTWO, Take-Two Interactive Software, the stock And the company was growing substantially, roughly from 150 all the way nearly to $300 until the last 3 or 4 months. This is telling us that the company is no longer growing. It's not expanding because it is below its 50-period moving average. So there's no reason for all this, fundamental analytics to figure out what's going on. The price is telling you everything you need to know. Or we can look at a weekly chart of Oracle. The same thing. Once we had consecutive closes right here going back to December, we knew that the company wasn't going to be expanding anymore, and it's gone down from roughly 200 down to roughly 140. Or Netflix. The company was expanding tremendously from 2024 on until October or November of last year. And this is where the market told us, not some guy on TV or reading some financial report. The market, the price told us that we are no longer expanding, and look what happened. Price has fallen substantially. So we don't want to invest in this or think that the company's growing until we have consecutive closes in the blue buy zone. Now we can use this as a general market indicator to tell us which direction the actual market is going. If we punch up a monthly chart of the spiders, that's the ETF that represents the S&P 500. Well, we can see that obviously we've been growing since 2012. This is a chart going back somewhat, decades here. How could this have helped us? Well, if we simply applied the buy-sell line, in 2012, when we had consecutive closes above, that was telling us on a monthly time frame that the spiders, the ETF that represents the S&P 500, was in a growth phase, and that the market most likely was going to continue going higher until we have consecutive closes in the red sell zone. So you see how this tool is extremely powerful, but at the same time extremely simple to use. With one click, you can find out whether your company is growing on a quarterly basis or not, without all this mental gymnastics trying to figure out what the earnings mean, what the financial indicators mean. You can just simply click it on our chart. But you'll only find this chart on our platform, the PTS Primo charting platform. Now, if I go back to the presentation and we take one last look at our disclaimer, let's close up and recap what we taught you today. The best way to identify quarterly growth is to simply apply the buy-sell line. Why? Because you will have a higher level of consistency if you only buy and look to buy when price is above the 50 and only sell or look to sell when price is below the 50. It's that simple because the market is telling you whether the company is growing or not. Now, I have a great offer for all of you taking time out to watch this video today. We're going to offer you one of our best courses. This is actually a 10-video course which we call Trading Floor Edges course. Now, it's many more high probability trading edges similar to what I just taught you today, but entirely different in terms of what they're actually teaching you and what they're based on. For example, I'll teach you 2 more techniques that will elevate your trading. 4 different ways to be in sync with the overall trend. I just shared one with you today, but we have a total of 4 different ways to do it. 3 steps to a successful trade. How to fine-tune your entries. So many traders and investors have a difficult time with entries, and we're also going to include next-level exiting techniques. But I think here is the best thing about the Trading Floor Edges course. Not only can you apply all these trading edges to any market and any time frame, whether you're a short-term trader or a long-term investor, but we're also going to throw in a superior candlestick trading edge. Now, I'm sure that at one point, either all of the people watching this video right now or have already done so have traded with candlesticks, all right? But most of you are not seeing the type of results you were promised, right? I know I wasn't when I was first introduced to them. We have a great way to trade non-traditionally candlesticks. For example, we're looking at this older chart of PLTR. Now, currently it's in an uptrend, right? Making higher highs, higher lows. Now, the traditional way to use candlestick patterns is as a reversal pattern. So in other words, if price is in an uptrend the way it is right now, we're looking for a candle pattern that's telling us that that trend is going to conclude and reverse to the opposite direction. And what do we have here? We have a dark cloud cover pattern, which is telling us that there's a high chance that the trend is over and we're going to reverse, and then followed by a bearish engulfing pattern, one of the most bearish patterns there are, telling you most likely we're going to reverse very soon the trend. So if you were trading the traditional way to trade candlestick patterns, most likely you would either exit your position or go short, right? Maybe buy some puts. But if you had sold right here based on that one pattern, look what would have happened. This is what we hear most often from our students and what I have firsthand experienced myself trading candlesticks the traditional way. Here's what we're going to do in the course though. This new and I would say more consistent way of trading candlesticks would not have generated a sell right here. In fact, this high edge pattern would have generated a buy signal right before where you thought to sell, and you could have taken advantage of the next week's strong upward move. So this is what you're going to get, a superior candlestick trading edge. You'll learn all the rules within this video course. It comes with 49 years of trading experience that you'll get in these 10 videos. Yours to keep, yours to have forever. Now, let's break it down. This 10 video trading course usually sells for close to $1,000 on Pro Trader Strategies website. That's my sister site. They're in charge of all the sales and all the discounts. But here's what we're going to do. Just because you've taken time out to watch this educational video, we're going to reduce this tremendously, but only for a limited time. We're going to give you a discounted price of $19. Think of it, $19. You're going to get nearly 5 decades of trading tips and techniques and a way to trade candlesticks, all for that low, inexpensive price. But it's for a limited time only. Now guess what? We're going to also include an extra bonus. If you decide to take advantage of this course, along with your purchase of the Trading Edges course, we'll also include a 50% discount on virtually any other product we sell. Anything we sell, any other technique, any other indicator, any other strategy, you'll get half off. So think of it, all of this you're getting for just $19. You owe it to yourself to take your trading to the next level. Here's how to take advantage of this great limited time offer. Contact my sister site, which is Pro Trader Strategies. They're in charge of all the discounts and the tech support. They can answer any question you have about pricing or any other method we have. I would highly recommend giving them a call at area code 310-598-6677. Now that link you see at the very bottom is the link that will take you to the info and sign up page if you'd like to do it online. It's not a live link though. You'd have to copy and paste that onto another browser if you'd like. But the easiest way probably would give Pro Trader Strategies a call at 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to either take your order or answer any question you have. There's absolutely no obligation. Just give them a call and they'll fill you in on any other bonuses we have as well. So as we conclude this educational presentation and take one last look at our disclaimer, I just want to thank you all so much for taking the time out to watch this educational video. But most especially of all, I look forward to all of you becoming students of mine in the 10 video Trading Floor Edges course. Thank you so much. I'll see you next time. Bye-bye.